I woke up and said, are you kidding me? This is absolutely insane, because a lot of the things that I've talked about to get to that point seem to be happening. The deliveries, the massive deliveries on COMEX. You realize that in the first 10 days of the month, we've already seen almost $13 billion delivered to COMEX. Now, who the hell is doing that? Yes, it hasn't left. About 1 million ounces have left COMEX, about 4.5 billion in the last 30 days. But that 12 to 13 billion that's been delivered, so not all of it's left COMEX. So what? These people who always cash settled, always, less than 1% of contracts stood for delivery my whole career, 36 years. And all of a sudden, wicked amounts every month, billions and billions and billions, and no one's talking about it but me. Some people in the industry are, but no one in the mainstream. And these people are prioritizing numbered bars in their account rather than paper promises. Who in God's green earth stood for possession for almost $13 billion worth of gold? And the mainstream idiot media doesn't say a word about it, but that's 19 straight months of this shit. Every single month, billions and billions and billions and billions and billions and billions and billions being delivered, and not a word by the mainstream. They're missing everything. The rest means squat. It means squadouche. The price gets hammered. China imports more in the first quarter of this year in silver than at any time in the history of the country as a second largest producer of silver in the world. In February, after silver got kneecapped, right? The first 2 months of the year, January and February, the largest ever 2-month deliveries on COMEX, ever. January, February. And someone stands for or in February, it was only 25 million ounces delivered. It was a big January. But 39 million ounces left the warehouse in February as the price got kicked in the balls. Pardon my French, right? Down on the ground crying is the price. And someone stands for delivery for 25 million ounces at the time, 26 million, about 1.4 billion or whatever it was. But then 39 million ounces, 2.9 million pounds leaves COMEX on an armada of semi-trucks. Where the hell did it go? 4 billion in silver. Where did it go? Why does no one talk about that? Why is that not more important than the Fugazi price that is a tool of misdirection? Price misdirects you. Deliveries betray the price. Getting back to Judy Shelton and her July 4th, that's where this all stems from. She said he's going to say something about it July 4th. So one thing that happened about a week ago that I think should add a little bit of credibility to all of this is a man named Paul Winfrey. I don't know if you caught Paul Winfrey or his significant.
I didn't. Yeah. Let us know about it.
So Kevin Warsh's key policy advisor, first person that he brought on board, is Paul Winfrey. He's a conservative economist. He is now a key policy advisor to the new Fed chair, Kevin Warsh. Okay. He is the president and CEO of the Economic Policy Innovation Center. He's a former Trump White House deputy assistant for domestic policy. Okay. And he's an ex-Heritage Foundation scholar. He's one of several economists that wrote a report called Project 25, and they all took one chapter, and his was chapter 24, the chapter on the Federal Reserve. He seriously explores in this chapter returning to a form of a gold standard to fight inflation and the boom and bust cycles that are created by the Federal Reserve. And he specifically highlights gold convertible treasury instruments, AKA gold bonds, as a practical transitional tool. And that's Judy Shelton's idea. And now the first guy Warsh brings on is a dude whose one chapter is on the Federal Reserve and gold-denominated bonds. Interesting. So is it going to happen? I don't know. And I don't think it's game over if he doesn't say anything about it. But I do believe that it's time for him to say something, because at the same time, the Financial Times 2 days ago came out and said China tees up digital payment system to compete with dollar. In other words, they are now releasing mBridge. I've talked about mBridge for 3 years. mBridge is the cross-border payment system that was designed by China, Hong Kong, Thailand, United Arab Emirates, and Saudi Arabia. And when you think of the expansion of the Shanghai Metals Exchange and the expansion of all these exchanges, now the only one that I'm not sure on is Thailand. But China, you have the Shanghai Metals Exchange. Hong Kong, you have the new exchange that was just built in Hong Kong. United Arab Emirates, you have an exchange in Dubai, and the Shanghai Exchange is building a parallel exchange in Dubai as well. Saudi Arabia, the Shanghai expansion has already finalized in Saudi Arabia. That vault is done. So you got all of these countries that have built this parallel system that all have gold vaults that will all connect to one another through the expansion of the Shanghai Metals Exchange in all the way into the Belt Road. The world is moving to a system where gold will be integrated into the monetary system. And the beautiful part about Judy's idea, and he highlights this, he talks about, he being Paul Winfrey, that the beauty of the gold-backed treasury is that it doesn't stymie or stifle monetary policy, where if you have a true gold standard, you can only expand the money supply at a certain level as per how much gold you have. Here you can do whatever you want monetarily, but what gold will do, and its backing of the treasury, it will signal to everyone, well, your monetary policy is asinine or it's really good. Because the higher the price of gold goes, the more benefit it is to those that are receiving that final payment in gold. And while I'm more than happy to once again go into my theory with you, I will just simply say that July 4th is a very big day for me, and I could see me staying up all night July 3rd, waiting for this event July 4th with red eyes and, I mean, like just praying that because if it does, it might be the best call I've ever made. And I think it truly gives hope to this country in a way that I don't think people quite understand, because let's just call it what it is. We're broke, we're insolvent, we make nothing, we're uneducated. And here's AI just in time, and no one wants our treasuries anymore. And if we don't do something, I don't know how any of us as dads, you and I, look our kids in the face and say, you two have the same level of chances of prosperity and the same blank slate that we had. And I think it's hard to say that now. I don't think it's the world is a very different place, and it's getting much more difficult to find your place in this world and make your mark. I was watching a show just the other day. The guy, he's like, look, I just graduated with the best possible degree you could have until now. And that was a computer programmer for, a software programmer. And all of a sudden, my job is meaningless because AI does it like that. And so all of these jobs are changing. There will be other industries that come out of AI and other opportunities, but many of the industries that people have spent college career learning, like accounting as an example. Who needs an accountant? My son was getting paid money, 80 grand by Price Waterhouse to analyze a balance sheet for a real estate investment trust. He works for me now, but before that, why does Price Waterhouse need to spend 80 grand for every junior accountant to analyze a balance sheet when AI says, oh, by the way, that's done?
Yep.
And the world is changing. We must bring back manufacturing. And I think my thesis centers around gold-backed treasury bonds and the Genius Act and what that does to the front end of the curve and how this all intertwines. But the moral of the story is, if he does say that we're going to issue a gold-backed treasury, now here's where it gets interesting. You had mentioned to me that there's these numbers, this revaluation that everyone thinks is coming. The Treasury Secretary said, we're not going to revalue gold. And I don't think they need to. This is where Tether comes into play. Tether, and all of the issuers of the soon-to-be new dollar stablecoin that will come out in January, the Genius Act. What has Tether been doing for the last 3 years? Well, they bought more gold than anyone in the world but the Central Bank of Poland.
They're becoming a gold accumulator. They kind of look like a central banks kind of, to a degree, with that philosophy.
Right, and who's the CEO of USA Tether, who is the Genius Act component of Tether? Well, that's none other than Bo Hines, who was Trump's crypto czar through August. And I remember Tether was in trouble for a while by the Justice Department. That just went away. No one really talked about it.
They were based outside of the U.S. There was a lot of issues going on, and so they've restructured that. And to me, it looks like they are getting it ready to be something.
Well, right? And it's kind of like my feeling is that wink, wink, nod, nod. The Clarity Act says you cannot transfer the interest, right? You have to do something. What have they been doing? They're putting into gold. What does that do? Well, besides pushing gold higher, it devalues the dollar. The only neutral asset by which you can, a neutral reserve asset that you can measure something by neutral is gold. If you try to measure it against another currency, remember what Triffin's dilemma says? Countries sell their currency in the open market to buy dollars. We don't give them enough through trade alone, thereby devaluing against the dollar. It's a faulty measuring stick, like the Dixie. The dollar index is a poor measuring stick. You're measuring it against a melting group of currencies. Instead, measured against the one neutral asset you can measure anything by, and that's gold. The higher gold goes, the lower the dollar goes. And number one, that would allow us to someday sell manufacturing. That's what everyone else has done to us. Number two, makes paying off your debt easier. And number three, if gold continues to go higher, that every time money moves, anytime, whether you buy a pack of cigarettes or a new house, it's backed by stable coin, backed by 90-day or less short-term treasuries, and the interest isn't transferable. So whether it's Tether, who's amassing all of this gold, who I believe the deal was, here's what's going to happen. You're going to buy this shit. You're going to make millions and millions and millions of dollars and sail off into the sunset, but you will sell that gold to the U.S. Treasury. And now Bo Hines is going to come in and make sure that you're going to sell that gold to the Treasury. You're going to accumulate gold for the U.S. government by proxy. So now we're not anywhere near this. It's you guys doing it. But that gold somehow is going to make it into our coffers. And now as gold continues to move higher and higher and higher and higher, because every time money moves, that interest goes into gold, you devalue the dollar more and more and more and more and more and more, and the dollar goes higher and higher and higher and higher. Now think of Judy's idea. Van Eck funds came out and said if the dollar loses reserve status, it goes to $139,000. That's them saying it, not me. Van Eck, the mutual fund company, and their emerging bond market team came out with this paper. Now think about that. You sell a 20-year bond deliverable in 20 years and for $20 million worth of gold. At today's rates, that's about just over 4,300 ounces. At 139,000, well, geez, what's that? It's about 130 or 40 ounces. And they didn't have to artificially, now they could market to market, and they should. They could mark the gold that's a 42.22 to market, whatever that price is, which would give a big boost to the Treasury General account, because every $4,000 increase in the price of gold gives a Treasury General account $1 trillion free and clear. It's an accounting gimmick using gold certificates. But the moral of the story is, if you have neutral parties like Tether, like JP Morgan, like Citibank, like all issuing these stable coins, and the Clarity Act says you cannot transfer that, and Trump says this is what's going to happen. You are going to accumulate gold for a period of time and sell it to the Treasury quietly. Now gold gets accumulated by the U.S. government on the down low. All these companies make a gazillion dollars. The dollar gets clobbered, which makes paying off the debt easier, which makes sending manufactured products to the world much easier. And the key to it is the no upfront borrowing costs of Treasury bonds that issue no coupon, just redeemable in gold. Meaning you sell a bond I sell a 20-year bond to you, you give me $20 million, and I owe you $20 million of gold in 20 years. Okay, cool. Zero coupon. Now with that $20 million, I build a state-of-the-art manufacturing center. And as gold continues to move higher through and by the way, every time money moves, what happens to the short end of the Treasury market? Plastered to the ground. The dual mandate of the Federal Reserve has just been neutered. So now you don't have to worry about, is he a hawk or a dove? It doesn't matter, because every time money moves, short-term treasuries are being bought. That synthetic demand for the Treasury that plasters the front end to the floor. And what little interest is accumulated goes to buy gold, which continues to devalue the dollar, which continues to push gold up. So you don't have to revalue it as a country other than marking it to market. And over time, it keeps going higher, 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 higher. The dollar goes lower, lower, lower. You can actually bring back manufacturing at zero upfront borrowing and sell products to the world and look our kids in the face and say, we fucked up in a big way. But you know what? We're going to do something about it. And God bless him if this is what he is doing. I hope he is. I'm the only one stupid enough or maybe brave enough to say this is what I think he's doing. We'll find out. But if not, our kids are in big trouble. We all are in big trouble. We don't make anything. We're broke. We're insolvent. We're uneducated, and we're in debt. And here comes AI. It just doesn't work anymore. And I don't know. I think July 4th is a massive day for me, if you can't tell. And I hope it will turn out not just for me and my reputation and the things that I've said, and I could be wrong. I did an interview with Michelle McCord the other day. I said, I'm 50-50 that it happens on July 4th. That's a big statement for me because I don't ever go out on a limb. But I will tell you that, at least in terms of specific timelines, if it doesn't happen, it's not over. But if it does happen, it's the best thing that will ever, I believe, happen to this country in many years, because you finally have someone with the balls and the courage to stand up to the fact that we are a country that is on the decline because the middle class is being eviscerated. And the stock market at all-time highs, held up by 7 to 10 stocks that are all IT-based, all tech-based, has nothing to do with the mainstream economy or the middle class who is suffering and being eviscerated by the day.